Okay, let's look at a few important things to remember with regards to PPE, IAS 16. Everywhere I've indicated where we are in the standard, so you can have your IAS 16 open in front of you, and you can highlight or tag, flag where you feel necessary. Okay, so when can we recognize an item to be PPE? So recognize means when can we process the first journal entry. So it must meet the definition of PPE, and that will be a tangible asset held for use or supply of products, services, or for rental to others, or for admin purposes. And the expectation is definitely that this will be non-current assets. We will use it over more than one period. The definition of an asset will be a resource under control of the entity, will lead to an inflow of economic benefits, and exist as a result of a past event. So it is a tangible asset, so therefore it must also meet the definition of an asset, and then it must meet the recognition criteria. Only then we can classify something as PPE, and each significant component should be classified separately. We will tell you in a test, is this a significant component or not. So to account for it, a significant component, please read through your IAS 16. A degree of judgment is used to know is something, a component, significant or not. How are replacements of components accounted for? We will derecognize the old component and then capitalize the new component. Inspection costs we've covered in second year. So the inspection cost, we will depreciate the inspection cost we've incurred just over the period until the next inspection will take place, and then we will capitalize that inspection cost again. Spare parts and servicing equipment, that will be in accordance with IAS 16 if they meet the definition, but otherwise these items will be classified as inventory. Safety and environmental costs of PPE. Please read your paragraph 11, where it says that the acquisition of such PPE items, although it will not directly increase your future economic benefits, it may be necessary for the company to obtain the future economic benefits from its other assets. So you must incur these safety and environmental costs for your other PPE item to obtain future economic benefits. Then you can capitalize such costs. For example, a chemical manufacturer may install new chemical handling processes to comply with the environmental requirements for the production and storage of dangerous chemicals. So therefore, the related plant enhancements will be recognized actually as an asset, because without them, the entity is unable to manufacture and sell these chemicals. However, the new carrying amount of the asset and the related assets will be also tested for impairment. But this is quite interesting. You can definitely look at that in paragraph 11. So we've looked at the recognition. Let's look at the initial measurement. So we know now when can we recognize an asset as PPE. Now we want to know at what amount. So it will be measured at cost, only at fair value if it is exchanged. We will look at that a bit later. So cost will include, this is second year, purchase price less discounts or rebates, import duties, non-refundable purchase taxes, directly attributable costs. So that will be costs that we have to incur to make sure we bring the asset in its working condition for us in its intent to use it as intended for. So examples of directly attributable costs you can read here. Examples of cost that will not be capitalized you can read in red. Future costs, that will be if we have to remove or dismantle or restore at the end of the useful life, we will have to calculate the present value and add the present value to the cost of the asset. Remember, we will the capitalization of the cost to the carrying amount of PPE will stop as soon as the PPE item is in the current location and it's already in the condition necessary for use as intended by the management of the entity. Deferred payments, if it is longer than the normal credit terms that we will tell you in a test, the cost price will be actually the present value of your future payment. Why? The creditor should initially be measured at the future value in terms of IFRS 9, but the difference between the actual payment and the cash price equivalent is recognized as financing cost over the remaining period in profit or loss. So if it is a deferred payment longer than normal credit terms, you calculate the present value, and only the present value you will add to your PPE cost. Then exchange of PPE items. You first have to determine, does the transaction has commercial substance. We will let you know in a test or exam, but you can see here commercial substance will incur if it will change the risk, timing and amounts of cash flows, or it's an entity specific value of the affected part of the entity's operations will change due to this exchange. But most of the time we will tell you it does not lack commercial substance or it does. Then if the transaction has commercial substance, we will measure the acquired asset. So the asset that I will now put in my books, I've received something. That will be, for example, I've received a car. That will be the fair value of the asset given up. Let's say I've given away a building. So the fair value of the building, that, let's say it's $1 million. That $1 million will actually now be the cost of my vehicle. This is the case, except if the fair value of the asset acquired, so the fair value of the vehicle is more accurately determinable. If the transaction does not have commercial substance, then I will measure my vehicle, the acquired asset, at the carrying amount of the asset disposed of, the carrying amount of the building. Here I have just a diagram to show you, does the transaction have commercial substance? Yes, no, and you can look at this tree in your own time. Dismantling and removal cost, very important. As I've said, you have to calculate the present value and capitalize that to the cost price of the PPE item, and only if it is a current obligation. So from day one you have this obligation. At the end of 5 years you will have to incur these costs. If the PPE item is actually used to produce inventory, the dismantling and removal cost will be capitalized to inventory. So please look at these two examples in your gripping GARP in your own time. Also, obligation can arise either at initial recognition or over time, if the obligation is as a result of the asset being used to capitalize to the asset, or over time if the asset is being used to manufacture inventory. So then I will capitalize to the inventory. So please read through your gripping GARP this specific chapter. In the next recap video we will look at subsequent measures.